Last year we watched as almost all of the super high-yielding bond alternative stocks got eviscerated thanks to the dramatic rebound in interest rates. Suddenly, the high yielders became a lot less attractive, especially the master limited partnerships, now that you could actually get a decent return from treasuries for the first time in years. And with the yield on the 10-year treasury ticking back up to 2.88% today, it's worth asking which of the master limited partnerships managed to thrive last year despite the steady climb in rates. I've got one for you. It's Crosstex Energy LP, XTEX, which owns thousands of miles of oil and gas pipelines, as well as some nat gas gathering, processing, and fractionation assets, and is a play on the domestic oil and gas revolution that I tell you about in Get Rich Carefully. This is a stock that has had a very rough time during the recession, but lately the company has taken its fate into its own hands. Hence why Crosstex has given you a magnificent 80% return since we last spoke to the CEO a year ago, despite an environment that was often downright hostile to MLPs. Back in October, Crosstex and Devon Energy announced they're forming a new business. This is such a winner. Devon is spinning off its midstream assets and merging them with Crosstex to form a new company, which will call itself EnLink Midstream Partners, in a deal that will close sometime this quarter. This deal will be immediately additive to the combined company's distributable cash flow, the key metric for MLPs because it controls how much money they can return to you, the shareholder. And it should have enormous synergies. No wonder Crosstex has performed so well when it combines with Devon's pipeline business and turns into EnLink. I think you're going to have a terrific stock. So let's take a closer look with Barry Davis, totally bankable president and CEO of Crosstex Energy, who will lead the new company. Find out more about what EnLink Midstream will look like and where it is headed. Mr. Davis, welcome back to Mad Money.
Thank you, Jim.
Have a seat, sir. Thank you so much. Stock was at 15 when you came in. Told us a very compelling story. Not a lot of people believed, but it sure did pan out.
It's been a great year, Jim. Thank you.
Now, one of the things that we have been finding about the master limited partnerships, the ones that have the least, the ones that have gone up the most and have been most consistent, are the ones that don't have that much commodity sensitivity. In your excellent presentations on improved cash flow stability, I see right up front that 95% of the contract are fee-based. So I think we should be in good shape, right?
You bet, Jim. These are exciting times for us and really a new era in the energy industry overall. This strategic combination with Devon positions us to take full advantage of that. And what we're seeing with this combination is an enhancement of our financial strength, as you refer to. What it does is it positions us to really triple in size from a pure financial size standpoint with over $700 million a year of EBITDA. As you said, it does result in us having about 95% of our gross margins that are fee-based.
Right.
And importantly, Jim, it does also give us a great blend of assets where we're generating almost 75% of our gross margins from liquids-oriented plays, which is important in today's market.
That's what people want. Now, I think people have to understand that even though you're merging it with Devon, you've got lots of partners, Anadarko, EQT, Apache, XTO. Can you explain to people how you could have those partners and yet still be with Devon?
Yeah, a part of what makes us strong, Jim, is a great diverse portfolio of relationships. Devon has certainly been one of our largest customers over the last 10 years, and that's really what led to this opportunity presenting itself today. But we clearly have a great portfolio that have been built over the last 17 years of our existence in the energy space.
Now, what we've discovered is there are companies that can continue to add and add and add to their pipeline capacity each year do have a better shot at making that dividend go better, provided that you don't layer on too much debt. Are you in a position to each year to be able to make it a bigger pipeline?
Absolutely, Jim. That's one of the exciting things about this is we have what an MLP needs in order to grow. We have 4 different channels or avenues that we think of for growth. Historically, we've always been able to grow from our platform by expanding that platform. Well, this transaction expands our platform, our breadth of assets to work from. Secondly, we have built-in drop-downs. We have the
explain what that drop-down is a term of art.
Yeah, it's a term that we use in the MLP market where you have a financial sponsor like Devon, who is one of the largest independent E&P companies. Right. They've developed assets and will continue to develop assets that will be able to drop down or transfer into the MLP on an accretive basis. As a result, we think that we'll see good, strong distribution and dividend growth over time. The third avenue of growth, and this is important, we also think that Crosstex, who has been very active in the M&A market in the past, as well as Devon, when we're able to work together, we think that we're going to really see some great strength as a team.
Now, one of the things that has been perplexing people is a lot of the domestic oil company stocks have been going down, and a lot of that is because they can't get the oil to where it's needed. Now, we had thought that these were all problems that would have been solved by now. Yeah. Do you see this still as a problem? I know you've got Colorado, you've got Oklahoma. It seems still locked to where we don't need it. Why is that?
Yeah, that's part of what I refer to when I say a new era in the energy industry, and that is getting the growing base of production. We've seen extraordinary growth on the supply side of the energy market, from 25 to 50% growth from natural gas to crude oil to liquids. So terrific growth, but it's not in the right places.
Yeah.
It's not in the same places it's always been. That's what's great about this time for a midstream company like us. It's exactly what we do. We connect production to consumption.
Now, there's in the presentation, it says that Devon's donated, or I guess what you would say is attached hundreds of thousands of acres to this partnership. How does that work?
Yeah. One of the great things about this transaction, Devon, as a financial sponsor, as an owner, a significant owner in the company, will do everything it can. It's contributing at the outset over 800,000 acres of dedicated acreage with production that will come to us over time.
Now, how is that? I mean, in other words, as they drill, it goes right back, it goes right into yours?
Sure. Devon is able to do something here that was very important for them, and that is strategically position themselves to have an MLP and the efficiency of capital that can be accessed through an MLP to finance their midstream infrastructure growth that goes along with their E&P company. Doing this with an existing company like Crosstex really rapidly accelerates their plan. Devon could have done this standalone, but it would have taken them 3 to 5 years to achieve the position that they're getting.
One last question, Barry. A lot of these MLPs were born of a time where oil companies are strapped, and they felt like they had to raise some capital. We've seen it in a couple of cases. This is not the case with this deal.
Yeah, clearly Devon could have done this standalone.
Right.
But Jim, they have accelerated the full valuation, if you will, of their midstream assets. Fundamentally, there's a difference in the way midstream assets are valued from E&P assets.
Right.
And as part of their E&P company, Devon was really missing an opportunity to see that value. So not only do they get it with Crosstex, but they get it quicker than they could have on their own.
Well, you did better than every other oil executive who's come on the show in the last year, so I am tempted to believe what you say and think that this could be a really good thing for individual investors. This is what they should be looking for. That's Barry Davis, the president and CEO of Crosstex Energy and the incoming CEO of EnLink Midstream. Just check where this stock went to, and you'll understand why I think this is a great idea. Stay with Cramer.